Wealth. Welcome to another exciting video of our YouTube channel, right? So today I'm not going to be very long. I'm just going to go straight to the topic, right? So today we are facing one of the most familiar topics that you will find in the market, right? If you are trading forex and you don't know what I'm going to talk about today, simply means you are on the wrong platform. Okay, so what I'm going to talk about today is what we call risk management. I know a lot of traders are very familiar with this concept, right? If you don't know how to apply risk management, simply means you are not going to be able to know how you are making money. You're not going to be able how to cut your losses. You're not going to be able to know how to cut your wins, right? So there is two-way stream in the market that we are all familiar with. It's either you are going to lose or you are going to make money, right? There's nothing in between. There's no middle part. You're going to lose money. You're going to make money, right? So in order for you not to lose more money, what should you do? That's the question you must ask yourself each and every day before you open a trade, right? In order for you to make more money, what is it that you must do, right? So the first key concept that I'm going to give you today is what we call leverage. Leverage, right? So the explanation of leverage is quite very broad, right? A lot of traders will tell you this explanation and other traders will tell you this explanation. I think leverage is based on the experience that you have been in the market and the time you overcame from losing money into making money. That's the day you realize what is leverage, right? So in simple words or in simple terms, leverage is when you risk with a small money to make high returns. Okay, risk low, make more money. Okay, so simple words or simple term is that leverage is when you risk with a small money, small account to make more money or to improve or to increase your account, right? Meaning that if you have a $10 account, right? You have a $10 account and then you turn it into a $50 account, right? In a day. So it simply means what you used from $10 to $50, you applied leverage of how much? Of $40. That's your profit, right? You had $10, you made a profit of 40. Let me just write it like this, right? So this was your what? Your actual amount, okay? This was your actual amount. You were trading with $10, right? And then you turned it into a profit of $40, of which now on your account, you have what? You have a return of $50 in your account. Yes, it's possible to make money from $10 into $50 in a day or in one trade, right? Reason is you were using what we call leverage, right? So you are risking with small money to make more money. Don't find yourself doing the opposite. Don't find yourself doing the opposite, right? And then you say $10, right? So this is what we call a lose situation, right? So if you had a return of $50, you open a trade hoping to make more money and then you lose that money and then you end up on $10. It simply means in this case or in this scenario, you didn't apply a proper leverage, right? Instead, what you were supposed to do is, if you have your $50 like this, right? This is your actual return. Now you have $50 on your account. Let's put it here, right? This is your actual amount now. It's no longer $10, right? It's on $50. So what you're supposed to be doing is, if you have $50, right, at least risk with your $20. Okay, of which the actual return will be how much? $30 in a lose situation. You still have profit at the end of the day. So the main thing is, if you have $50, don't risk with all your $50. Make sure if you open a trade, you are just going to risk with your $20, and then you will be left with your $30. You still have an account in the market. In this way, there is no way that you are going to blow your account. Why? Because you are using what we call leverage, right? Leverage is a two-way stream, right? If you lose using leverage, it simply means you will still have your account. You will still have profits in your account, right? If you win, it simply means you will have more money than the actual amount that you had before you opened the trade. I hope I am making sense, right? Because risk management it's a deep conversation, or it's a deep topic in the market. If you don't know anything about risk management, trust me, it will be hard for you to make money, right? It will take years, or it will take a long time. So rather than that, start first with the principles. Start first with the knowledge, right? Start first with risk management, because risk management every time will apply when you open a trade in the market, whether you are going to make money or whether you are going to lose money. Okay, so if you're on profit, at least make $40. That's profit for you with a $10. But if you have a $50 account and then you are going to lose, unfortunately, be left with at least $30. $30, you still have your account. The main thing is, each and every time when you open a trade, make sure that there is something that is going to be left off. In this way, this topic, you will never come across it multiple times. Although yes, blowing account will always be part of the market, right? But don't make it familiar that each and every time when you fund the account, you know you are going to blow an account. Every time you fund the account, you blow account. Every time you fund, you blow account, right? So in this way, make sure that you always leave something in the market or on your actual account. Your actual account or your actual deposit must always have something. Okay, even when you are losing in the market, make sure that you leave something. So leverage. Always risk small to make higher returns, right? Always make sure your actual account it's lower than the return it's lower than the return that you're going to make. Yes, definitely, right? Your actual account, if it's $10, the return must at least be more than $10. That is what we call what? Profit at the end of the day. Each and every time when you open a trade, the only key or the only thing that you want is profit, right? Exactly. So in that way, if you make something more than $10, know that you have reached your profit. Right? I hope that makes sense. So in simple words, remember, leverage is when you make money with a small account and turn it to a higher returns. In the market, I've seen traders, I've seen students, I've seen even me myself trading with a $50 account, turning it into at least $1,000 account. Reason is leverage, right? Leverage, trading with what? Trading with indices. Specifically, I was trading what we call Nasdaq, right? Nasdaq. So in these days, we can see that a lot of traders, they are really making massive profits. Congratulations to them, right? They are really making massive profits with just small accounts of $50 or $20, turning it into a huge amount of money. So every time I used to ask myself, even myself when I was a beginner, right? How come does someone make $1,000 with only $50 on his account? The actual account is $50, but the profit is $100. So I always ask myself, how is this possible? Until I came across the word that says leverage. Risking with small money to make more money. So yes, it's possible with $50 you can make $1,000 returns. Reason you are applying leverage, and also you are trading indices, Nasdaq, US30, gold. We can see what the market can do. You can make money with a small account, yes, to turn it into a bigger account at the end of the day. In the morning, before you traded, your account was $50. At the end of the day, you are on $100. What did you do? You made profit. Profit using what? Using leverage and proper risk management, of course. Okay? Right. I hope risk management, leverage, is making sense. So remember, the day you make a profit, the day you make more money with a small account, know that what you were applying is leverage. Okay? So leverage is risk low for high returns, right? The second key, it's a daily target. I know a lot of traders are not really familiar with this. Not that we are not familiar, but this is what we avoid each and every time, right? Daily target. Every time, each and every trade that you open, each and every day, like I'm saying, this is a daily target of which, okay, let me just be fair. Let me be fair because I know a lot of traders, others have what we call a weekly target, right? Weekly target, and others have what we call monthly target, of course, monthly target, right? And then others yearly target, yes, for long-term traders. Remember, in the market we want profit, but not the same way, right? We don't calculate our profits the same way. Okay, so talking about a daily target, right? Just to bring it to reality in a day, right? So if your daily target, right? Daily target is $50 a day. Okay? What's gonna happen here is this. When you have a target, right? Not to mention daily, weekly, or just to put them in general, right? When you have a target, you are always going to be tested by what we call patience and proper discipline. Okay? When you have a target, always patience, discipline will always come for you. Trust me, every day, right? Reason is when you make $50, right? You wish to make $50 each and every day. The thing is, after you make that $50, right? Let's say you were trading with your $20 account, right? And then you turn it to, or you make a profit of a $50 profit, right? And guess what? The trade is still running. The trade is still open. You haven't closed your positions. Here's the thing. My advice is, no matter how good your trade is, right? No matter how good the opportunity is, no matter how very fine or how very fast the market is running for you, no matter if it's a good day or it's a bad day, make sure once you reach your $50 account, always close your position. Always close your position. Okay? But in actual situations, this will happen. Remember, you have a daily target, right? Then you make, for example, a $30 profit, right? Profit in one trade, right? Let's say you were trading NAS 100. I'm going to show you how to do this. Let's say you were trading NAS 100, right? And then you made a profit of a $30. And then you do what? You close your profit. Don't go back to the same pair you were selling, right? Don't go and sell again. Once you close your position, at least move. Yes. Okay, let me just write it in simple words. Right, going to make this very nice and easy for all of us, right? The advice is, if you made money in Nasdaq today, if you sold it, don't go back and sell it after you closed your position. Okay, so don't find yourself going to the same position and sell again. For example, let me make it like this. Let's say this is Nasdaq, you sell, right? This is the market, right? Going on your direction, right? And then this is $30, right? $30 profit, right? And then you do what? You close here. You take your $30 and the market continues to go on a sell. Don't find yourself coming back and sell again. What's going to happen is the market can retrace. Just after you sell again for the second time, the market can retrace and you will end up losing that $30 of yours and even that 20%. That $20 of your actual account that you had in the market. So you will end up losing all of your money or all of your profit. You will end up blowing an account. Okay, so once you close your position, go to another pair. Yes, you haven't reached your daily target. You just made $30, of which you are left with $20 to make that $50, right? Exactly. So if you close your position on Nasdaq, make sure that you leave Nasdaq. Go to another pair. Gold is there. Currency pairs are there. US30 is there. SPX 500 is there. Go to another pair at least and look for opportunities there. You have made profit on Nasdaq, move to another pair. Move to Euro USD, move to USD CAD. There's a lot in the market, right? So the main thing is, no matter how good the market is, the market will tempt you. There's a lot of temptation in the market, right? Stick to discipline. Stick to your discipline. Stick to your patience. You haven't made that $30. Be patient. Another opportunity will come on a different pay. Then you can make that $20 also. Okay, right? So if you have a trader, make sure that you have a daily target. Trust me, in this way you are going to grow your account. Let me show you how. So for example, right, you have $40, right? Your daily target is only $20, right? $40. Say this is Monday, right? This is Tuesday, right? And then Wednesday, Thursday, and Friday. This is how you are going to grow your small account. Okay? You have your $40. This is your what? Your actual account, right? So your daily target is how much? It's $20. $20, all right? $20, right? So Monday, if you have your $40 account, right, and then you make a profit of a $20, right? So 40, and then you make a profit of 20, you are now on how much? On $60. Simple. Now you're on your what? Your $60 actual account, right? You make a profit again of your $20, of which that is your what? Your daily target each and every day, right? Now you're on how much? You are on $80. Okay? Now, Wednesday, same thing applies. $80, you make how much? You make a profit of $20. You are now on how much? $100. Daily target, right? Daily target is $20. $20. That's the actual amount, right? And then right here, you are on $100. You are on Thursday now. You make another $20, right? You are on how much? You are on $120. The profit is still $20, right? Now you are on $120, and then you turn it to how much? It's 120, right? We are on 120, and then you make another $20. Right now you are on how much? You are on $140. Profit is still $20 each and every day of your trading, right? Imagine such small amount each and every day, right? With only $40 in your account. At the end of the week, you're on how much? $140. Using what? Using your daily target of $20 each and every day. Once you make that $20, you close your position. Once you make that $20, you close your position. So imagine doing the same thing for another week. How much will you will be on, right? And doing the same thing for a month. Just imagine if you can make $140 in a day, in a week, right? Imagine how much you can make in a month, right? Imagine if you can make only $20 in a day. Just imagine how much you can make in a month. There's other responsibilities that you can do. There's other payments that you can make with the withdrawal of making $20 each and every day. Consistently so, right? So what's going to tempt you here is what we call consistency. Consistency. So you must make sure that you make this $20 each and every day consistently so. The reason is if you lose, you must also know how much you're going to lose for that day. I'm coming back to that also, right? Remember, it's still part of the daily target. So there is a daily target of win and there's a daily target of a lose. It's two-way stream, right? So if you risk with your $20 each and every day, simply means if you want to make $20, it's possible that you can lose the same, right? You know that if you lose on today's trade, you're going to lose that $20. But if you make profit, you're going to make that $20, right? So it's a two-way stream. So you have to be consistent. Consistency. Make sure that you always close your $20. That is consistency every day in a week, right? Possibly using a 0.01 lot size because this is $40 and this is only $20. Small lot size can make you huge returns. Never underestimate the risk of using 0.01 lot size, especially when you are trading Nasdaq and US30, gold, and all of those volatile market or volatile pairs. Never underestimate a small lot size. The profit that you're going to make each and every day will turn out to be a huge amount at the end of the day, at the end of the week, at the end of the month, at the end of the year. Those small profits, once you look into them, once you look into your trading history, you will see that you really made a lot of money with only a small lot size. Okay, I hope that made sense. So as a trader, make sure that, just going to remove this, make sure that you have a daily target. So it's going to force you to be disciplined and it's going to give you confidence because each and every day you will make the same money. The only time the daily target will increase is when your account also starts increasing, right? So if this week you ended up on 140, right? Simply means you can change your lot size to 0.02 and make more. But now, before I talk about the lot size, let's talk about the daily target, right? So if you made $140 last week with only $20, now you can change it to what? To $30. That's how the only time you will increase your daily target is when your account is also increasing. When your account increases, your daily target must also increase. That is how you will do what? You will improve your trading journey or your trading skills. Simple. The only time you will change your lot size is when now your account is growing, right? Now let's get back to this proper lot size. A lot of traders, we tend to miss the part of lot size, right? When you get to the market, they will tell you that you are only going to make money with a huge lot size. 100% correct. But if you can make profit with only a lot size of 0.01, how are you going to make profit with a lot size of 0.10? How is that possible? You know, because the same strategy you are using here is the same strategy you are going to apply here. If you buy Nasdaq using support and a support level, you are still going to buy using the same lot size. But the difference is the lot size, but the market is the same. The strategy is the same. So there is no way that you are struggling to make money with 0.01 or 0.02 and then you wish to make money with this. You are going to blow accounts like crazy. So firstly, you have to start from the beginning, especially for us for those beginners, right? Start from the beginning. Okay, lot size is very important. You can't have an account of a $20 and then you use a lot size of 0.05. You can't have an account of $10 and use 0.03 lot size. This is not appropriate. What are you doing? You are using what we call improper, or you are using not a good proper risk management in this case. So what are you saying, man? What I'm saying is you must make sure that if you have a $10, you must balance your account. You must balance your account. How will you balance your account? When you use a 0.01 lot size, you are giving the market an opportunity